In the ruthless world of high finance, where fortunes are made and lost in the blink of an eye, one man has dared to defy the odds and reshape the game itself. Bill Ackman, a name that strikes fear into some and commands respect from all. But how did this relentless strategist rise from a small town in New York to become one of the most feared and formidable figures on Wall Street? Brace yourself, because this is the story of a man who didn't just play the game, he changed the rules, and in doing so, carved out a legacy that will echo through the financial world for generations. Bill Ackman, born into a family with strong business roots, was always destined for greatness. His early life in Chappaqua, New York, and his academic journey through Harvard laid the foundation for his future success. This introduction sets the stage for a deep dive into the man who would become one of Wall Street's most formidable figures. From a young age, Bill Ackman was different. Growing up in Chappaqua, he was surrounded by business and finance, thanks to his father, Lawrence Ackman, a successful real estate financier. This early exposure sparked Ackman's interest in the financial world, setting him on a path that would later lead to his groundbreaking success in hedge fund management. His childhood was marked by a relentless curiosity and an ambition that would not be confined to the small town where he was raised. Ackman's time at Harvard was pivotal. He wasn't just another student. He was driven, inquisitive, and always looking for the next big idea. At Harvard College, where he graduated in social studies, Ackman's analytical mind began to take shape. His senior thesis on the experiences of Jewish and Asian Americans in Harvard admissions was a precursor to the critical thinking and analytical prowess he would later apply in the world of finance. Harvard Business School further honed these skills, equipping him with the tools he would need to navigate the complex world of investment. In 1992, fresh out of Harvard, Ackman co-founded Gotham Partners with his Harvard classmate David Berkowitz. Gotham was an investment firm that focused on small-cap stocks and real estate. The firm quickly gained attention for its innovative approach and the boldness with which it pursued its investments. However, Gotham Partners' success was not without its challenges. The company got into legal battles with outside shareholders, which was a tough first challenge for Ackman. It tested his determination and taught him key lessons about the risks and rewards of big investments. In 2002, Bill Ackman made a bold move that shaped his career. He bet against MBIA, a big bond insurance company, questioning its top day-rate credit rating. Ackman thought MBIA was too exposed to risky mortgage-backed securities, but many in the financial world didn't agree with him. Despite the pushback, he stayed confident. When the 2008 financial crisis hit and MBIA's stock crashed, Ackman's gamble paid off big, earning him and his investors over $1 billion. This success boosted his reputation as a smart investor willing to take risks others wouldn't. Riding high on the success of the MBIA short, Ackman launched Pershing Square Capital Management in 2004. With $54 million in initial capital, mostly his own, Ackman set out to create a hedge fund that would leverage his activist investment strategies. Pershing Square quickly made a name for itself by taking significant stakes in companies and advocating for changes that would unlock shareholder value. Ackman's bold and often controversial moves grabbed headlines, but they also delivered substantial returns, establishing Pershing Square as a powerhouse in the hedge fund industry. One of Pershing Square's earliest and most notable successes was its investment in General Growth Properties, GGP. In 2010, GGP was on the brink of bankruptcy, but Ackman saw potential where others saw failure. He invested heavily in the company, playing a crucial role in its restructuring and saving it from collapse. The turnaround of GGP not only saved thousands of jobs, but also resulted in substantial profits for Pershing Square. This move showcased Ackman's ability to spot opportunities in distressed assets and reinforced his reputation as a master strategist. Ackman's investment strategy is defined by his role as an activist investor. Unlike traditional investors, Ackman doesn't just buy stocks. He buys influence. He takes significant stakes in companies and then pushes for changes that he believes will increase their value. This hands-on approach has made him both a hero and a villain in the eyes of many. Ackman's activism often involves shaking up management, advocating for strategic shifts, and even pushing for the sale of underperforming divisions. While this approach has led to some high-profile successes, it has also resulted in public battles and intense scrutiny. Throughout his career, Bill Ackman has been involved in several high-profile public spats with other investors and corporate executives. These confrontations have often been dramatic, playing out in the media and capturing the attention of the financial world. While some view these battles as unnecessary distractions, Ackman sees them as a crucial part of his strategy. By going public with his criticisms, he puts pressure on companies to make the changes he believes are necessary for long-term success. This approach has earned him both admirers and detractors, but it has undeniably made him one of the most talked about figures on Wall Street. The rivalry between Bill Ackman and Carl Icahn is legendary on Wall Street, starting with a contentious deal in 2003 over Hallwood Realty. The agreement included a clause known as schmuck insurance, where Icahn would owe Ackman a portion of the profits if he sold his shares for a substantial gain within 3 years. When Icahn made a significant profit and refused to pay, Ackman sued, leading to an 8-year legal battle that Ackman eventually won, deepening the animosity between them. Their most famous showdown began in 2012 when Ackman took a $1 billion short position against Herbalife, alleging the company was a pyramid scheme. Icahn, seizing the opportunity to counter his rival, bought a 26% stake in Herbalife and publicly defended the company. The two men's feud culminated in a fiery CNBC interview in 2013, filled with personal insults and accusations, underscoring their intense rivalry. Ackman spent around $50 million on a public campaign against Herbalife, which led to some government scrutiny. However, Herbalife stock eventually rebounded, resulting in Ackman closing his position at a loss of nearly $1 billion in 2017. Meanwhile, Icahn profited about $1.3 billion from his investment, solidifying his victory in this high-stakes battle. This saga is a defining chapter in Wall Street history, showcasing the fierce competition and immense risks that shape the world of billion-dollar investments. In 2015, Ackman made another high-stakes bet, this time on Valeant Pharmaceuticals. He believed the company was undervalued and poised for growth, so he invested heavily. However, the bet quickly turned sour as Valeant became embroiled in scandals related to its business practices, leading to a dramatic drop in its stock price. The Valeant debacle resulted in significant losses for Ackman and Pershing Square, marking one of the most challenging periods of his career. Despite the setbacks, Ackman's commitment to his strategy and his ability to bounce back from such a public failure is a testament to his resilience and determination. In early 2022, Bill Ackman made a surprising move by investing heavily in Netflix. This was a significant departure from his typical investments, signaling a shift towards the rapidly growing technology and media sectors. Ackman believed in Netflix's long-term potential, especially given its dominance in the streaming industry. However, this investment was unlike his usual activist approach. Instead, it resembled the value-oriented strategy often associated with Warren Buffett. Despite his confidence, Ackman's investment in Netflix proved to be ill-timed. The company's stock faced steep declines as concerns over slowing subscriber growth and increased competition shook investor confidence. In just a few months, Netflix's stock plummeted, and Ackman, who had bought in at a higher price, decided to exit the position to avoid further losses. This marked one of the more notable setbacks in Ackman's career. Unlike his more successful bets, this one underscored the inherent risks of market timing and the volatility of the tech sector. Ackman's decision to cut his losses, rather than holding on to the investment, reflected a strategic shift in his approach, one that prioritized capital preservation over potential long-term gains in a volatile market. The Netflix episode also highlighted the difference between Ackman's approach and that of Warren Buffett. While Buffett is known for holding on to investments through thick and thin, Ackman's exit showed a more reactive strategy, driven by the changing dynamics of the market. Ultimately, the Netflix investment was a learning moment for Ackman, reminding him and others in the investment world that even the most carefully considered bets can go awry. It also reinforced the importance of adaptability in an ever-changing market landscape, a lesson Ackman continues to carry forward in his investment philosophy. Beyond his career in finance, Bill Ackman is also known for his philanthropic efforts. Through the Pershing Square Foundation, Ackman has donated millions to various causes, including healthcare, education, and human rights. His commitment to philanthropy reflects his belief in using his wealth to make a positive impact on the world. Ackman's charitable activities have earned him praise and have become an integral part of his legacy. Balancing his aggressive investment strategies with significant charitable giving showcases the duality of his persona: fierce in business, compassionate in philanthropy. Despite the challenges and losses, particularly with Valiant, Ackman made a remarkable comeback in 2019. The key to this turnaround was his strategic move to invest in a new set of high-potential opportunities, including a notable stake in Lowe's, which performed exceptionally well. This shift to more promising and less risky investments, combined with a refined approach, allowed Pershing Square to achieve significant gains. Ackman's success in 2019 not only restored his reputation, but also reaffirmed his position as one of Wall Street's most formidable investors. Today, Bill Ackman continues to be a significant figure in the world of finance. His investment strategies have evolved with the changing landscape, yet his core principles remain the same. Ackman remains committed to finding value where others see risk, and his ability to navigate complex financial waters has kept Pershing Square at the forefront of the industry. As the markets continue to evolve, Ackman's influence shows no signs of waning, and his strategies continue to be studied and emulated by aspiring investors around the globe. Looking forward, Bill Ackman's future seems as bright as his past. With a legacy already cemented in the annals of Wall Street history, Ackman shows no signs of slowing down. His philanthropic endeavors continue to grow, and his investment strategies remain sharp. Ackman's ability to learn from the past, adapt to the present, and anticipate the future will ensure that his impact on the world of finance endures for generations to come. As we conclude this journey through the life and career of Bill Ackman, it's clear that his story is one of relentless ambition, strategic brilliance, and unwavering resilience. From his early days in Chappaqua to his battles on Wall Street, Ackman has demonstrated what it takes to succeed in the cutthroat world of finance. His legacy is not just in the billions he has earned or the companies he has influenced, but in the lessons he leaves for future generations of investors. If you enjoyed exploring the incredible journey of Bill Ackman, make sure to subscribe and give this video a thumbs up. We'd love to know your thoughts. Do you think Ackman's bold strategies are the key to his success, or do they come with too much risk? Share your opinions in the comments below, and stay tuned for more deep dives into the world of finance. See you in the next video.